insights in the news shaping the markets. For that, we welcome in Jonathan Corpina's with us, Senior Managing Partner, Meridian Equity Partners. Good morning.
Hey, Nicole.
I feel like we made it another week through. It's been really busy. We've gotten in a lot of news. This jobs report today, what did you make of it?
Yeah, we've gotten a lot of economic data and dates on our calendar that we've been looking for. We've seen a lot of volatility in this market. Yes, the market has been trending higher, but the swings that we're getting are certainly big. I think what we're looking for, important day today, we have a lot of Fed speakers coming, speaking today before their blackout period, which is ahead of the Fed announcement and their meetings that come on the 18th. Right? So I think we're going to look to hear some Fed speak today to get some validation that the Fed is going to continue in their measured pattern of cutting interest rates. We're pricing in, traders, everyone's pricing in 25 basis points. So the verbiage today, the message that we're going to be looking for is just to make sure that we're kind of continuing on that path. The economic data that we get, some good news, some bad news, earnings season, some good numbers, some bad numbers. I think it all kind of puts one theme in place that yes, our economy is getting better, albeit at a slower pace, but the pendulum is moving in the right direction. But the whole thing has to be coupled with the Fed's next move.
It's interesting because we're seeing the Fed Watch tool here, 25 basis points, 87% likelihood of that cut. So, pretty much everybody's still counting on that after this jobs report. We saw October revised slightly higher. Nothing great there. We think about Boeing. We think about the hurricanes. So, sort of those are one-offs, I guess you can call them. Some concern about the wage growth number. And some inflation, but I want to keep it to the markets here because we're going to be talking to Joe Bruce Willis more about the economy. For investors here between now and the end of the year, what do you tell them? I mean, you noted Apple and Amazon acting well. What does that mean for investors? What should they be doing?
Yeah, I think, historically we talk about the Santa Claus rally. And now if you take a snapshot of this year, right, we're in between this election area where we have a president that was been elected and we're heading towards the end of the year and then the inauguration, some policies that are going to be put in place at some time. It feels like this market wants to go higher and higher. We do get some one-off negative headlines that puts pressure on our markets, but even though we're trading at highs, it seems like things are lining up appropriately. We've got the VIX trading back down below that 15 level. We're trading in the 13s now, which show us that there's a little bit more comfortableness to our markets. We're seeing the small caps starting to catch up with the other indices, which gives us a broader approach and a broader look to the markets. So it feels like this market does want to go higher, but there are certain risks that are out there, right? If the Fed pivots, or if there's any indicators that they feel that they should pause, that might pivot our markets. We've got geopolitical risks that are out there. We continue to talk about inflation and how inflation pricing has not really come down yet. There is that hope moving into a new administration that we're going to see that. We see interest rates where they are. Specifically, if you look at mortgage rates, yes, the Fed has cut 50 basis points, 75 basis points so far this year. Mortgage rates are still hovering up in that 7% area. So we haven't seen that translation yet. So I think investors need to understand that the economy is good. The economy is getting better. There is some rosy outlook with a new administration coming in. But we're not going to get the swing back. We're not going to get the movements in our economy as fast as we're expecting. So we've got a patient cycle that's in front of us. If you are patient and continue to be patient, you will see that this market is going to continue to trend higher. But we're going to have the 2 steps forward, 1 step back approach. And you see that as of yesterday, right? We had a little sell-off yesterday and immediately bounces back on the news today.
Yeah, absolutely. We had Rebecca Walzer here yesterday. I mean, she's in this sort of camp that we could have a 30% pullback. She's sort of on the contrarian side, I would say. Most people seem a little more optimistic or volatility, but they're not calling for 30% pullbacks. When you talk about the different sectors, I know small cap, you say, is doing their job. Small cap, the investors of small cap in the last decade have not been very happy because they have not performed as well as tech or large cap. They were left behind a bit, but still doing okay, right? So what do you tell folks now when they have a portfolio? What should be in that portfolio to sort of set up a winning strategy for 2025?
Yeah, I have to think about what we forecast in 2025, and there's 2 areas that are there. As far as real estate is concerned, we're talking about interest rates. I think people have become comfortable at this point with interest rates trading at where they are. If they move back and when they move back, I think there's going to be more of a influx into housing pricing. I think people, if you're comfortable at 6.5% and 7%, they're clearly going to be comfortable at 5%. So I think there's been a little bit of a pause there. Even though housing prices has continued to tick higher, there will be some follow through into that sector there, and I think the housing sector will be impacted there. And if you look at the financials, right? We've talked a lot about how there's a lot of acorn companies that are out there that are waiting to IPO, that syndicate deals that are out there. They've been waiting for the right time. It's never the right time, but it feels like it's leading up to a 2025 year where we're going to see an increase in IPOs and we're going to see an increase in mergers and acquisitions, M&A activity. With that,
does that mean banks? Does that mean financials?
That means
for
banks.
You?
That means financials. That means that banks make a ton of money off of those deals, and it's been very quiet in that. I was talking to a customer today who's been talking about SPACs and how quiet that's been. Not that SPACs are going to come back, but there's a lot of money that's been sitting on the sidelines that's been waiting to be put to work, and I think we're going to see that in the M&A activity and in the syndicate activity, and that will be a direct impact to the top line of financials.
Right, understood. What about these tech names, and what about the NVIDIA, Tesla, Apple, Amazon? You're going to hold some of those? You're going to buy some of those?
You got to stomach them. That's what you got to do. You look at Tesla and the volatility that we've seen there. It again, it's like 2 steps forward, 1 step back. It starts this big move, and then we'll get a headline that's out there and how the administration is going to move forward with EV regulation, and then we get a pullback, and then it bounces back up again, reaching new highs. Any headline with AI, it seems like that sector is so overinflated, yet it continues to march higher and higher.
All right.
I think as technology progresses, we're going to continue to see that upswing.
Well, you certainly sound mostly positive.
I am positive.
Okay.
I am positive.
Good. Jonathan Corpina, great to see you.
Thank you,
Appreciate
Nicole.
it. Meridian Equity Partners here live on the floor.